and it is the 22nd of July, 2025. Coming to you live here from Israel, northern Israel. What I'm going to talk with you about is actually the Bitcoin supply shock. I got momentarily distracted there by some side info happening. So what is happening with the supply shock on Bitcoin? Well, if you'll notice, Bitcoin in the first half of July, that's this month, saw new investors in Bitcoin acquire 140,000 Bitcoin. This was reported, I think, on the 17th of July. So we're talking in the first half of the month, because by the time it hits being reported, it's already not fresh news. And 140,000 out of the supposedly 2.2 million Bitcoins that are held on exchanges, of which about 1.5 million estimated to be held in long-term storage, not touched. If anything, people just add to their holdings. They're not actually trading on those exchanges. They're just holding on the exchanges. Why are they holding on the exchanges? Some people prefer to keep their holdings on exchanges, even if they're not trading, just because they feel safer with their money that way, even though it's not a bank. And if you lose the money that's on the exchange, and you're probably never going to get any of it back. In many cases, yes, there are exceptions to that, but where people have gotten their money back. But most of the time, when an exchange gets rugged or whatever, when hackers socially engineer their way to the passwords and steal money from an exchange, then what happens typically is, they get away with it to some degree in most cases. And people who had their money on their exchanges just have to learn the lesson the hard way, which is not your keys, not your crypto. Don't keep your money on those exchanges. So in any case, what is happening with Bitcoin? Well, out of the 2.2 million coins that are on exchanges, supposedly, about 700,000 of them are assumed, or were assumed at the beginning of July, to be coins that could be traded. Yeah, bought, sold, whatever, in short-term exchanges. They were in on the trading. But now, that 700,000, or that 2 million, if you will, Bitcoins that were on the exchange has seen 140,000 of those Bitcoins exchange hands, which in all likelihood, those were bought from people actively trading who had their Bitcoins available for sale. Right? Or they bought them from the exchange directly, which has its own treasuries, and they sustain their treasuries and grow them by trading against their own traders for the most part. Some exchanges don't trade against their own traders, but they sell access to order book, order flow info, all that kind of stuff to big whales and institutions that trade against their own traders. So in effect, they still make money from somebody trading against their own traders, even if they don't do it themselves. What this means in a practical sense is that basically out of the 2.2 million Bitcoins currently on exchanges, 140,000 are now in the hands of new investors who didn't own any, at least they have new wallets that are holding them since the beginning of July. And why is that important? Well, it's important because if those 140 came from the stacks of the traders, and there's every reason to think that they did, they either came from there or they came from the exchange, which will offset those, Bitcoins by acquiring new Bitcoins in trades they win against retail traders. Then it means that we're talking about more than 20%, right? Well, actually 20%, right? 140,000 out of 700,000 is literally 20%. 20% of the coins that were presumed to be in circulation, like in active trading, 20% of those coins are now off the table. And that means that there's maybe 560,000 coins left for trading. Right? And if there's 560,000 coins left for trading, if you have another month, like we haven't even counted the second half of July yet, right? We're still in it. If the second half of July ends up being 0 coins, and August, all of August ends up only being 140 or even less, right? 120. Or let's just say August, September, October, November. Each of those 4 months, the grand total of them is only 140 each, right? Which is half of what July was. The likelihood of that is not likely, but let's just say that would mean that by end of November, there would be no coins left in circulation, right? 5 months in a row of 140,000 coins taken away from 700,000 coins over 5 months. That's it. No more coins left. The only coins that would remain are coins that would be sold at much, much higher prices by people who would begrudgingly agree to sell for extremely high premiums. Maybe, right? So we could very well be we're already at the place where we are having supply shock. I told you guys in July, it is very likely we will see the beginnings of supply shock. And that is exactly what we're seeing right now. We are seeing the beginnings of supply shock. You don't have to believe me. This is the beginning of supply shock. And what happens when we have a massive supply shock? Well, typically, when you have any asset that has a high demand and a low supply, there's only one thing that can happen in terms of its price and availability. Right? Because the availability is low, the demand is high, the price goes up. That's the nature of markets. It's Econ 101. Literally the law of supply and demand. So if you're expecting, a massive crash when there's so much demand and so little price, that's not going to happen. What you could see is if suddenly people start dumping all their coins onto the market, because if, let's say, the price climbs up to 150 grand, and all of a sudden people who've been holding for 5 or 10 years decide, you know what, yeah, 150 is my target, and they start dumping millions of coins on the market, and there's not enough of a demand for that, then sure, the prices will drop significantly, right? Hey, maybe they'll go back to super low prices. You know, maybe we'll get $10,000. Doubt it, but maybe we will. In all probability, what's going to happen is we're going to see prices not go to $10,000. And yes, there'll be some kind of correction at some point. Maybe well below 100K, maybe not. We'll see. I'm talking about big picture here, not intraday trading. This is not trading advice. 100% not. I'm talking about the big picture of the supply shock. The supply shock is inevitable on an asset that will have an increased demand and a decreased supply. Right? If that is the case, if there is an increased supply in Bitcoin, and right now we're seeing the big buyers continuing to buy. Like Strategy just bought 6,000 Bitcoins. How many in the last week? How many Bitcoins did you buy in the last week? Right? BlackRock is continuing to buy thousands. BlackRock has more than 700,000 Bitcoins. Strategy has more than 600,000 Bitcoins. Right? Together they have more than 1.3 million Bitcoins. And they want to have at least 1 million each. How many? Like there's not that many left. If they were to buy all the 700,000, that would be more than is currently available in circulation in active trading wallets on exchanges. So they would have to convince people who are holding in long-term wallets to sell. What are the odds of that happening? Just what are you gonna do? Anyway, Toda. What are you gonna do? Anyway, Toda. Have a great day. Funny retail stories. They have this app here. Anyway, yeah. So the supply shock, like I said, on Bitcoin, is very, very real. Right? It is absolutely happening, and to deny it, to think that it's not going to affect the market, is crazy. Hey, hold on. I don't know how much of that was recorded or not. Maybe some, maybe not. I don't know. Anyway, it's a fantastic dog I just saw. Amazing, amazing animal. Cane Corso, really great. Anyway, folks, the like I said, the supply shock on Bitcoin is absolutely incoming. I've been saying it over and over. That July is the month we're going to start to see real impact from it, and that is exactly what we're seeing. We're seeing real impact from the supply running low. What kind of impact? Well, first of all, we're seeing that the supply is now dwindling down to, like, even if you take that there's 2.2 million Bitcoins or whatever, even if you said it was 2.5 million, okay, are on exchanges, but even if only 700,000 of them were still available for trading. Like, if you completely ignore the fact that 140,000 Bitcoins have been purchased on exchanges, who did they buy them from? Right? They bought them from the exchange, which either got them from traders that they won against, like I said, or from their own reserves that they already have, which they've acquired over the years. Right? Because they most likely did not get them from long-term holders who saw prices hovering, like people who were holding for 5 or 10 years. And yes, there are people holding on places like Coinbase for 5 or 10 years, which may sound crazy to you, and arguably it is. But if they've been holding there for that long, for all you know, they have some Bitcoins that they bought for a couple of grand. They may not even remember they have it there. Like, seriously. Yeah, maybe they got an email from Coinbase saying, oh, you got to update your KYC or whatever. But that might have been 5 or 10 years ago already. Because they don't do that every year, right? Maybe they haven't looked at it in a few years. Maybe they know they have it, but they're just leaving it there because, well, they haven't had any problems with Coinbase, and they know that Coinbase is a regulated company because it's a stock, right? There's a Coinbase stock. So they figure, oh, it's safe because it's a regulated company that operates on the markets. That doesn't mean your crypto's safe there, by the way. Just because they're a regulated company doesn't mean they can't be attacked, and doesn't mean they can't have a lot of coins stolen from them. And even if they have a lot of coins in reserve to match whatever amount is being held on their account on their exchange by active wallet holders in the retail space, right? It doesn't mean that they necessarily, first of all, there's no guarantee that they do, right? Have they shown their books publicly? Yeah, they have to report. So the SEC might know that, but that doesn't mean that they necessarily have to match it. Like, the SEC might know that they don't have that amount, and they might be saying, okay, well, if you have 60% or 50%, if you're able to cover 50% of your losses, you're good. You don't know, right? They don't have to necessarily have 100% because you're taking a risk when you're leaving your money in someone else's hands. And the SEC takes that into account when they review their information, right? It's not like a bank where they guarantee you with the FDIC up to $100,000 per account or $250,000 or whatever the number is. Right? And yeah, the FDIC can also cover more if it wants to, like we saw happen at that Silicon Valley Bank, where they, in some cases, paid many, many millions of dollars to help bank accounts stay afloat. And in other cases where people had, less than 100 grand or less than a quarter million or whatever, they got nothing back, or they got like literally pennies back if they were lucky, pennies on the dollar if they were lucky. In some cases, literally nothing. So the FDIC isn't necessarily the insurance you think it is. Even though they're supposed to guarantee up to 100K or 200K, there are definitely cases in that bank where people did not get back the money that they were holding there. So put that in your pipe and smoke it, as they say. Consider that to be the case where there is no Bitcoin left on the open markets. And what happens then is that, price will determinedly go up as long as the demand remains. And again, we know the big buyers want to own millions of them. Strategy wants at least 1 million. BlackRock wants at least 1 million. 21 Capital wants at least 1 million. Other companies also want hundreds of thousands each. Metaplex, or whatever they're called, Metaplex, Metaverse, Meta something, that Japanese hotel company. They have, I think, more than 10,000 already, right? And originally they had a goal of getting 21,000. Now they have a goal, I think, of much higher. I think they want to have like 100,000 at some point. And the blockchain group in Europe and other groups, right? All of them basically, every one of them looking to do big buys on an asset that there's just not enough of to do that many big buys. Even if you just take the companies that are just listed now, without even looking at the rest of the big ETF companies that continue to buy them. Just the companies that are listed. That's more than all of the supply that's known to be held on exchanges. So at that point, if that's all gone, and the OTC well is dry, and buyers are buying far more than the amount being mined every day, like, think about it. There's really only one thing that can happen, right? At some point. Like, it could take months, maybe even take years. But there's really only one thing that can happen, generally speaking, between now and then. And that is as the supply keeps dwindling and the demand continues to stay where it is or grows, I mean, if I have to say it again, then you really need to go back to econ class, because that is the fundamental law of supply and demand. Econ 101. High demand, low supply equals price go up. Okay? That's it. Peace out. Happy trading.